If you're not paying attention today, you are just going to be steamrolled in about 3 years. It's coming. There's no avoiding it. It's important. You need to understand what its usefulness is and what its limitations are too, so that you're not bamboozled.
Hi, I'm Adam Gower, founder of GowerCrowd.com, where we help real estate syndicators find more investors. Welcome to the Easy Win AI Real Estate Show, exploring AI's impact on the real estate industry. Each episode offers practical tools, competitive AI strategies, and expert insights. For essential news and updates, visit easywin.ai and sign up for our free newsletter with actionable how-tos like how I added hours to my day by creating this clone of me you're watching and listening to right now. easywin.ai, the only newsletter you need on real estate and AI. All right, now back to the real me. My guest today is Sally Johnstone, who is Senior Manager and who heads up the Market Insights Premium Program at the Altus Group. Well, of course, the Altus Group, as you well know, is the, I want to say, parent company, whatever, the holder of Argus, deliverer of the Argus software, which I know you all know and love. They have massive amounts of data over there at the Altus Group, and the Market Insights Premium provides access to analyzing your specific data in the context of overall market conditions. It is fascinating, and Sally is going to be talking about exactly how they do that today and how you can tell whether or not your properties are performing, outperforming, or underperforming market norms in the exact area that you operate, so that you can follow up with actionable steps to change the dynamic, to change your NOI on any individual product or any individual asset that you may own. It is an extraordinary way of analyzing data and of leveraging AI to get ahead of your competition and to give the kinds of returns to your investors that they are expecting, and will keep them coming back for more. All right. If you've not already signed up for the easywin.ai newsletter, please go ahead and do that there at easywin.ai. We are providing a lot of immediately tangible and useful how-to information and data on what's going on in AI in the market. It's totally free. All there at easywin.ai. All right, over to Sally Johnstone, who is going to be talking about how the Altus Group uses data to enhance your NOI. Here she is. Sally, what a pleasure meeting you. Thank you so much. It's really a pleasure to see you this morning.
It's good to see you.
Thank you. You wrote a really interesting blog or insight on the Altus Group website about data science and AI in commercial real estate. Of course, that's my focus. But before we get going, Altus obviously is famous for Argus and Reonomy, actually. So can you give me a high-level overview of what Altus does, what you do, and how you are starting to integrate AI into your workflows?
That's a big question. Altus Group is a global company. Our headquarters is actually in Toronto, and it has various different parts to it. It has a whole tax appeal business. It has valuation management services, which is where we value the properties that are held by larger institutional funds. And it has, as you mentioned, Argus Enterprise, which is basically the 500-pound gorilla in the world of modeling in commercial real estate. The division that I work in is called Market Insights. Mm-hmm. And that's where we deploy our data science and machine learning models so that our clients can use them to use that insight to make better decisions about allocation, about disposition, about acquisition. So, and you mentioned Reonomy. Reonomy is a part of it. The other part of it, which was purchased by Altus Group 3 years ago, which was where I came from actually to work at Altus, was Stratum Analytics, which uses machine learning to create incredibly accurate predictions for demographic and macroeconomic data at very granular levels, right down to the census tract or neighborhood level, and even smaller, like a half-mile radius, which is really, really important when you're considering where you're going to develop or where you're going to buy.
Yeah, and a half-mile radius, you basically see that far, right, in many
Yes.
locations. So I want to read something here actually from your LinkedIn profile. And then I'm going to ask you a question. So you lead the team for Market Insights Premium, which is quoting again from your LinkedIn profile, Altus Group's groundbreaking initiative delivering data science derived insights, just what you were talking about, for commercial real estate portfolio and fund managers. What does this entail exactly, and how are you finding AI changing the landscape? And actually, you could probably also, as part, of course, I'm going to ask you a lot of double barrel questions because I don't know how else to do it. What is the difference between AI and data science, and how do these two things interact? I suppose we should start there.
So that's an interesting question. So data science is actually a term that was coined back in the early 60s at a conference in Dartmouth, which is what they were trying to decide what to call it. AI, artificial intelligence, actually comes from something Alan Turing came up with back in, he would be World War II, where
Yes.
it's basically when you can, what is the Turing theory? Basically when a computer is indistinguishable from a human being in its thought processes. So data science is the programming, the modeling, the machine learning. AI is just a part of it. It's just artificial intelligence, but at its core, it's data science. And at its core, it's mathematics. It's all math. People forget that. This isn't magic, it's math. Linear algebra, differential calculus, and then it's all programmed in a computer. You couldn't do things like this kind of modeling 10 years ago even. You need to have the big enough computers with enough resources to run these models because they're massive. They're massive. We have, well, dialing back to Market Insights Premium, which is, I lead the delivery team for that. Altus realized we're sitting on an incredible wealth of data. Incredible. Probably, no, not probably, definitely the deepest, broadest data set for commercial real estate valuations in the world. We've got all of it. And we use that anonymized client data to build some models. And one of the models we built was predictive of net operating income for industrial and multifamily properties. Other things that we've used are data science and machine learning knowledge to produce. Reonomy is actually a knowledge graph that connects, without a human in part of it, it connects various disparate data sources to come up with a single definition of who owns a building, what the building looks like, how much it's worth, what the mortgages are on it, what companies are tenants of it, if it's a building that would have tenants. So it combines all of those things into a knowledge graph so that you can, if you want to contact the owner of that large industrial warehouse up the street, you can look it up in Reonomy and do it. It's fascinating how much, and there's 54 million properties in there. But Market Insights Premium is something our clients sign up for. And what we do is for each of their individual properties, we produce what we call a fair market net operating income. In other words, what your net operating income should be based on external market factors, macroeconomic, demographic, and such. What's interesting is a client can predict their exact NOI probably more accurately than we can because they know their insurance bill. They know their tenant mix. They know exactly what it is. What they don't know is how they compare to others. Are they overperforming? Are they underperforming? And they don't know what factors are driving it. Is it population increase? Is it home value? Home value is actually materially important for industrial warehouse returns. You wouldn't think it offhand, but most of them are last mile. As more and more e-commerce happens, more and more demand for last mile, higher and higher the market rate goes up, and the higher the income. So all that stuff.
That's really fascinating, actually. So you've opened up a whole line of thoughts for me. Just say that again. Home value is related to what did you say?
Industrial warehouse income.
So explain that, because that's counterintuitive, actually.
It's actually, well, okay, so it's not right there. It's within a radius, generally a mile radius. Now, when you think about it, who buys the most e-commerce stuff? People with money. Homeowners.
Mm-hmm.
The number one spenders in the United States is that sweet spot of families between about 25 to 54. They spend more money than anybody else, and they definitely shop online. And we really saw it bump up during the pandemic when everybody was shopping online. And
Mm-hmm.
that's when you start to see really huge demand for warehouses. It's moderated somewhat, and it's not growing. The market rent are not, that they're not growing like they were, but it's fascinating to see that. Home
So
value.
homeowners, let me just clarify what you said there. And I don't want to get too bogged down in this. It's an interesting concept though, because we actually, when I first started doing podcasts, I was interviewing professors actually who were doing academic research. And they found something similar, a surprising result that was similar, not directly related. But when you say home prices, is that home prices in the immediate vicinity of industrial property? Not, you're not talking about national, how national. So why would that be? Because you would think that, I mean, intuitively you would think that you don't want to be near an industrial park or whatever.
So it's not right in the industrial park. It's within, I'll call it driving distance, within that last mile warehouse radius is where the values really went up. So the beauty of a machine learning model is it also senses things like population density, what the home value is in the immediate area, what it is in the broader area, what the incomes are. All of that was fed in and used for the unsupervised learning on our model. And for each individual property, the covariance, the coefficients are different. It is really impactful in some places, like in a suburb of Phoenix, and much less impactful for something that's right on the dock in Los Angeles or right near there, right? So but the model knows that. It's in that black box where the random forest regressor is working. It knows what's important where. And it can tell you, okay, for this particular property, the value of the homes around it may have this impact, this positive impact.
That's fascinating. Gosh, I'm kind of envious of you to play around with all this data. I love crunching numbers. So how do your clients use, how do they use this data actually, practically?
There's a couple of different ways. The one place you can't use it is in valuations because you can't use it in a legislated, regulated thing. It's machine learning. But you can use it to, let's say, make a disposition decision. You have 40 odd apartments. You know what your NOI is. You can see where you're overperforming or underperforming the prediction. We can also predict 1 and 5 years out with a fair degree of accuracy, how it's going to grow or not grow based on changes in population and home values and everything else. We predict, I'd say, about 70% of what the net operating income is going to be. So you can look, you can see, for example, oh, this property here in Nashville is actually, I think Nashville is great. Everybody thinks Nashville is great, but this particular property is in an area that is not as financially secure. So right now it's holding its own because there's a lot of demand for multifamily. But in 2 or 3 years, when more stuff comes online, because we all know the supply is coming online, that one is going to lose its value. There's your candidate for disposition because you have insight into what's driving its value. The guy who's buying it might not have the same insight.
That's fascinating.
What are you looking for? That's why you do this, to get that advantage.
So what do clients subscribe to be able to access? Is this Reonomy? Is it, Sally?
No, this is actually, it's a product called Market Insights Premium.
Oh,
it's the first offer that we deployed on our new Altus Performance platform, which is where we're bringing everything together into one place, which is, we're going to launch something huge at Connect in a couple of weeks, basically where it's nice. We're bringing a lot of the data into where it's on a dashboard for our clients so they can see everything all at once. So this is the first thing deployed on the Altus Performance platform. We produce your numbers for your individual portfolio, which are fair market NOI, how much you're up or down, what the alpha and beta scores are for the city you're in, and then what the 1 and 5 year growth is. But then when you dig down deeper, that's where we tell you the coefficients on the market factors.
Okay, so explain that term. What is the coefficient and how does it help somebody?
Think of a traditional linear model where you have like this weighted 0.5 and this weighted 0.3 and this weighted 1.5, right? To come up with your final answer. The machine creates that formula
Ah,
That's the whole point of it. That's how it predicts. It creates that formula. And what we do is we use something called Shapley additive. Um, we produce partial dependency, but it's SHAP files, SHAP values, that can derive the actual coefficients. So you can look at it, you can say, okay, so home value is not that important. So I'm not going to worry about what home values are, but holy cow, population density is really important. And I know that this particular area is gaining population at a greater rate than somewhere else. So this is an interesting place to be. It's fascinating because it's the one thing you don't know. You don't know what's actually driving the value of your building. You don't know what's driving NOI. You can make a good guess. This is fun.
interesting.
It's
So
data.
in other words, the coefficients in this case, and forgive me for paraphrasing this down to a 101 level, basically is telling you how to, or deciding how to weight each of the variables. Is it based on what's going on? So how is AI changing the landscape now? So you've got basic math. I shouldn't call it basic math, but you've got what would you call it? I'm trying to think of the term, but just using math equations to crunch through massive amounts of data sets. AI has changed that, hasn't it, slightly? So how does
Well,
artificial intelligence change what you do and what Altus does and the results that your clients benefit from?
so in order for a machine learning model to run well, you need to have data that's good data. You need to have some domain knowledge. And if you just go out and hire a data scientist off the street and say, go for it, he's going to come up with something like, oh, demand is driven by increases in labor force, which is a kind of a duh obvious, right? He's got to
Right.
work with a subject matter expert to really understand what you are trying to figure out and
Mm.
then build the models for it. AI, in common parlance, it's with ChatGPT, everybody just, the imagination's just exploded.
Hmm.
Statistics, math, machine learning models, they've been around for a long time. This whole idea of talking to a computer, well, typing to a computer, eventually talking to the computer. I know ChatGPT
I
4.
do actually talk to mine
Yeah, okay, so
on
you
my phone, so you can do it, believe it
somebody's
or
doing
not.
that.
But chatting,
So
the idea is to chat with the data, right? Mm.
yeah, so that's where people are. So the large language models actually at their core are math too,
Hmm.
because all a large language model is doing is predicting what's the next likely word. Doesn't look like math from our perspective, looks like typing and asking
Mm.
questions. Feels like Star Trek almost, right? Where you're talking
Yes.
to a
So with
computer.
AI, then, so maybe I'm going down a rabbit hole that has a dead end, but I don't think so. But it's probably just the way I'm asking. So does the implementation of AI, particularly in the insights premium, market insights premium, allow users to do exactly that, chat with the data? Uh, how,
No.
how does it work, or how are the outputs changing, if at all?
So there were no outputs that told you this before we created the models. They didn't exist because you needed to have that depth of data. You needed to have the computers to run. In this model, we refit the model quarterly as new results come in. It takes 3 to 5 days to run, even running on huge servers.
Hmm.
So it's a lot of calculations go into it to produce those coefficients for each individual. We also produce it for census tracts across the United States. That's an acquisitions use case, which we can talk about later. Um, you couldn't get this information. There was no way to know how your property truly, its net operating income, how was it truly compared to an equivalent property elsewhere? No way to know that. You were guessing. You
Hmm.
know how much it makes, you know how much your property makes, but you don't know how it compares to others. And that's what this is enabling.
So
It's
how long is Market Insights? I just want to make sure I keep getting the name right. Market
market
Insights
insights.
Premium, right? That's what it's called. Markets Insights Premium. So how long has it been around, Sally?
About a year.
And so one of the things that you talked about in the article on the website was hesitation of CRE professionals to take up new tech and to take up new ideas. How has how has your progress been in attracting professionals to using these tools? And what are the challenges that you've come up against that have created friction? Because it sounds like To me, it sounds like a no-brainer, but what is the challenge that you've found and what has been the uptake?
There's been uptake at about the level we expected it. We knew it was going to be. It's not going to be immediately purchased by 90% of the commercial real estate world,
Mm,
because part of what you're working against are people who have instincts and trust their instincts. They've done this for decades. They know what's good. They know what's bad. They don't need a machine to give them a third-party, unbiased analysis. They know.
mm,
And so much of it is gut feeling. I mean, talking about this co-working space, it's in a department store that was built in 1934 that they renovated. They kept a lot of the Art Deco in it. I never would have, a machine, like no analysis would have told you this was a good idea. It's a small city in Maine. Why would it be a good idea? Well, it is a good idea because it's doing really well. So people look at that and they're like, well, what do I need your analysis for? We have our own data. Well, because our data is unique in the industry. Our analysis is done by, I'm unbiased here, the best data science team in the industry. And it's rigorous, man. We're a publicly traded company. We can't mess around. We've got to be accurate and we've got to be secure. So why resistance is, we already know that. The other
mm,
thing is, there's a lot of prop tech that's come out that I would call AI washing. It's not really machine learning. It's not really artificial intelligence,
mm.
but it's a startup and it's got a nice sheen on it.
Right.
Josh Pinkman, who is from Columbia University, has some very strong feelings on this. I don't know if you've spoken with him.
No.
He's brilliant. He's brilliant, but he's very skeptical. And actually, I considered it the highest praise when he said, "Oh, your stuff actually is legitimate. It is useful." So yes, there's some old school thinking in the industry, but we're coming around. We're coming
So,
around.
okay, so let's actually drill down on this because this is what's very interesting to me. Just a kind of a yeah, I want to say a dumb question, but is cost a factor also? I mean, if you were to make this product free or make it, like ridiculously affordable, I don't know what it is. Do you think
Mhm.
that would open the gate to more people, or is it really that people do trust their instincts more? That they just don't think they need data. They have a solid enough handle themselves.
Well, if you made it free, no one would value it,
Yes,
right?
exactly. Yes, that's why I said a small amount. You're right. People
So
don't value anything that's free. You're quite right. But
there
yeah.
is definitely more price sensitivity in the commercial real estate world and the
Mhm.
institutional investment properties and all the funds, just because of everything that's happened with office valuations and how much they've suffered recently. There's some funds that are, yeah, cost conscious.
Mm.
Funds that have really forward-looking teams. And this is interesting. I'm thinking Odyssey, which are the biggest ones. There are some Odyssey funds that have like one person on the research team. There are
Mhm.
other Odyssey funds that have a team of a dozen. So it's there's almost like a pre-built bias. Are they inclined to use data? Are they inclined to think
Mhm.
about analytics as a useful tool for making decisions? They're more open to Market Insights Premium, and that's where we're having the greatest traction, and they're paying the price that we're asking.
So actually, this does dovetail into my next question. Is it only cost effective for and also friendly enough to use, candidly? And I've not used it, as you know, but would like to. Something we should talk about, actually.
No, I'd be happy to show it to you.
Yeah,
Yeah.
we should do that. In fact, my next call is to do exactly that. Uh, but is to go through some demos, which I think are really a good way of showing people how these things can really benefit them. But does Market Insights Premium, is it only cost effective really for people with shops with huge portfolios, or is it also effective? And I think you actually gave the example of 40. I think you said 40 units, a 40 unit multiple. That's tiny in, in the world that you and I inhabit. Is it valuable for somebody that does have a 40 unit? Should I sell? Should I do this? What should I do? Can it really add value to that? Or is it really fund level? You're just looking at
It's,
portfolio.
it's really a fund level tool. I think it would be overkill for an individual property. The model was built actually using a minimum of 50 units
Okay.
in a building, but yes, those are small. I think if your fund has, let's say, 20, 25 properties, then it makes sense to pull in Market Insights Premium. Because the other thing it does for you is it gives you a quarterly update on your performance. You can see all at once. And you're a man, some of these managers have 300 properties under them. They
Right.
can't go deep into every one of them. They need something that
Mm.
they can look at and say, I need to talk to that manager, and I need to figure out what's going on with the property taxes here, right? Because
Interesting.
they've got so many to look at. And they do a deep dive maybe once a year in the top 5 and bottom 5. So for them, it's a really useful tool. For someone who only has 1 or 2 properties, probably not. I wouldn't.
So what would be the and we don't need to drill down too far on this. So what would be I think you said it, but the minimum kind of scale, number
I
of
would at least
units,
20, because then you also get insights into the
20
portfolio.
properties, right? 20
Mhm.
properties.
Because the other things you can do with this is I can actually tell what your portfolio strategy is based on how your over and under is distributed. If most of your properties are underperforming, you're probably value add or core plus because you're buying them underperforming. And once they start overperforming, you're exiting. So that balance in the portfolio tells me what your strategy is. If you're pretty much a normal distribution, probably a high peaked normal, you're probably a core fund that's held your assets forever because you've optimized their performance.
Interesting.
It is interesting because numbers are just numbers until you start to derive insight. And that's why we have a delivery team, myself and my colleagues, because we found that if we just gave people the numbers, they're like, that's nice.
So you
Actually, I have to work with them.
so actually, you're obviously familiar with Star in the hospitality
Yes,
industry, yeah. So your clients' input, presumably in some kind of automated way, you directly link to their financial performance, to their P&Ls, so that you can analyze on an ongoing basis. Is that fair to say?
there's currently a human link where we have to upload the data. We're not directly linked into their
Okay,
systems yet. That's the ultimate goal of the performance platform. Right now, it's still
right.
people, but yes,
So in principle, then it's not a one-off thing that you do. It's something that is ongoing.
every
You
quarter.
track all the time, right?
Yeah.
And then, in the same way as Star does, do you look at macro data from the same market and provide comp set analysis?
Yes, that's part of what we do. We look at the mean and median of fair market NOI and the growth that's anticipated in an area. We we look at how operating expenses tend to trend in an area because operating expenses have a huge impact. Actually, they're one of the biggest levers for improving your NOI.
Right.
Maybe something you already know. Um,
Well, it's been one of the major challenges for a lot of sponsors who have recently come into the market, recent being the last 10 years or so, has been the management aspect, hasn't it? Do you
yeah.
provide recommendations as well? Guidelines? So just give me an example of how that might work for a client. What would they see? Yeah.
So I'm thinking with that. So one thing, I'm going to give away a little bit of a secret here. So
I love that.
if your property tax is more than about 12% of your effective gross income, you've got a problem. You need to appeal because that is having a more negative impact on your net operating income than just about anything else you can do. And that's one of the things we can do is we can identify where your property tax is off, where it's too high. Operating expense ratios. They're different from city to city. Some cities have a higher ratio of expenses to income, like a Los Angeles. Others have lower. But if you're out of line with the rest of your city, you need to look into that. What is it? Is it vacancy rate? That's the other thing we look at is like vacancy rates and normal rent, like what your rent range is and what the normal rent range is for your submarket. We look at all of that. And depending, I mean, if something's performing basically on par, if it's just meeting the net operating income, the fair market net operating income we're giving them, we're producing, the machine learning model is producing, we don't go too deep into that because we assume it's just performing. But we definitely pick apart the ones that are underperforming by more than about 10% because there's something there. There's something in the operating expenses, there's something in the revenue that's off, the vacancy rate's off, or there's something about the property tax that's bad. Overperformers.
I was about to ask about that. Yeah.
Okay, so overperformers. This is anecdotal because I don't have a large enough data set to say it definitively. There's something about proximity to open space that drives significant overperformance. And we're talking a rail trail, you know, where they convert the railroad to a walking, biking trail. If your property is adjacent to that, or a park, or a land conservancy, you're overperforming by 20 to 30%.
Really? Now, hang on a minute, just a minute. I mean,
I want to quantify it somehow. I do.
Well, but hang on a second. So why is that something you can't quantify?
So
if you overlay maps or something, I mean, you're using maps as well, right?
So somebody else, we can't, for commercial use, you can't use those data sets for commercial use. We have to be able to, it has to be something we're permitted to use as Altus Group. It's definitely on my short list of projects that I want to do.
All right, so hang on. So I got to ask this. But you can't use Google Maps just to look at a location and say proximity to.
Well, that's how I figured it out. Is I looked at Google Maps, I looked at satellite maps because I was wondering what do all these overperformers have in common? And I literally looked at satellite maps. I was like, oh my God, look at that! Look at that! Look at that! You could see,
and you can't. I'm just curious. Again, I don't mean to. I don't. Again,
you can. Okay, so if you wanted to do that, there is I think Google Maps has it. There's a whole parks and trails website that has the latitude, longitude coordinates for each of the public spaces like that. So you have your own lat long for your building or buildings that you're considering. So this is how I would set up the project. So I've got that. I would do a distance, probably Euclidean distance, and then compare. The problem is we can't use that data as a company because we would use it for a commercial purpose.
And you can't use it for commercial purposes. All right. Well, that's really interesting. And
we're still looking.
Frustrating as well. So let me ask you this then. So apart from that, which is fascinating and also makes intuitive sense as well, do you look for places that are pleasant to be near, right? You want to live somewhere where it's pleasant to live. In terms of this overachiever group, what characteristics do you identify they have that set them apart from the underperformers?
Garden style almost always overperforms. Some of this might be a hangover from COVID days when people were looking for places that had easier access to the outdoors and moving into the suburbs, but definitely garden style apartments do better than high rises. Yeah.
What about management practices? Property management practice. Is that something you can see or somehow derive?
So we don't get that deep into their property management, but I have noticed that vertically integrated funds that are all doing their own property management are not always performing the best in terms of net operating income, but I don't know if that's an accounting thing or if it's an actual performance thing. It might just be the way they do their accounting. You can identify when a property management group, if different properties are managed by different groups within a fund, you can identify which ones are weakest and start reconsidering who you're using.
Really? So you know who the property managers are?
The fund does. And that's where I would reach out to them and say, do you have, who do you have managing the properties in this particular location? Is it the same as this location? Invariably, it's not. It might be a different group or a different division of a group that's doing the property management. But we can figure that out.
That's fascinating. Again, you know, I worked with a fellow, a long time ago, who went on to be general counsel at JD Powers, actually.
Oh,
And JD Powers have this really interesting business model where they provide ranks, right? They analyze how companies perform. And then I don't know if they do it now, this was 100 years ago, but they would sell you the right to say that you had a JD Powers, stamp of approval or whatever, number one on JD Powers. So you could only use that if you paid them to let you use that. And in the world of property managers as it is today, that would be really interesting to know
yeah, it would be,
who
wouldn't
stands
it?
out. Yeah. So what developments do you see, Sally, in the near future in AI that you think are going to have the most impact?
Hmm. So I really, really like what they're doing with generative pre-transformers and large language models. We should get to a point where you can just say to your computer, oh, I have, 200 million to invest and I want to get X return, and what sector, what property, and what should I expect? And build me a pro forma. Like, we should be able to do that eventually.
Hmm.
Because look here, it's an algorithm. It's steps you have to take. Identify what properties. One of the things that's really cool in Reonomy is we score the likelihood of a sale. Even if something's not on market, how likely is it to be sold? And it's an algorithm developed using machine learning. What are the signals generally for something to be sold? So wouldn't it be cool if you had your 200 million to invest and you could just say, where should I put it? And it tells you
And then goes out and calls
quantitatively.
all the property owners for
Yeah,
you.
wouldn't that be nice? It calls you and makes an offer.
Negotiates the contracts and just sends them to you to sign
Yeah,
at the end of the
that
day.
would that would be funny. And so many people are worried that AI is going to take their jobs, and I wish people
Mm.
wouldn't worry about it, because what it does is it frees you from the boring stuff. I mean, there is going to come a point in time where none of us are writing emails, right? I mean, I know there's a lot of people who are already using ChatGPT to produce email,
Responses. Yeah.
other written communication. Um, if you code, you have to understand a bit about code before you do it, but you can ask like GitHub Copilot or ChatGPT, write me a little script to do this, and it
Mm.
will. And then if you run it and it comes back with an error message, you say, this is the error message I got for
Correct.
that script you gave me. And ChatGPT will tell you, oh, whoops, change this line.
Yeah.
That kind of thing. It's just, that's going to revolutionize how we approach work. And it's going to free up so much time for really creative thinking,
Mm.
really looking for new opportunities. Less time crunching, more time imagining.
Fascinating. First of all, the word creativity. I mean, that's really going to be a distinguishing factor, right? Everyone having access to these powerful tools does level the playing field, but the players that succeed are the ones who are the most creative with how they use it. And it's also funny that you mention code, actually, uh, because ChatGPT, and I'm like a heavy user of ChatGPT. He keeps trying to get me to install Python and run Python scripts, and I've been a little bit hesitant to do that, to be honest.
No,
I
no, no,
know,
no,
you
do
look
it.
aghast. What?
No, do it.
Do it, I know.
Python is the easiest language to work with. Just
Well,
put it in language.
especially when you can ask ChatGPT, please just give me the code. I mean, I don't just input it. But it does. For some reason, I'm asking enough questions that it keeps encouraging me to install and run Python. And you know what it reminds me of, actually, Sally? And then I'm going to wrap up with three rapid fire questions for you.
Okay.
But when I remember being a young kid, I even remember the room I did this in. My Somehow we had a computer. I forget even what it was. It was steam powered. It was a long time ago, very long time. And there was this game called Pong. I think it was called Pong.
I
And
had that
Pong
game.
was like it was like a tennis. It was like, oh no, hang on. It had one little white, it had a straight white line that went up and down, and there was a thing that bounced off bricks, and you had to try and knock all the bricks. Somehow I remember being, I don't know how I got into it or why I even was interested, but I was able to see the code, and I extended the code so that the bat was the entire length of the screen just to see what was. And it feels like that with AI now. And the idea of installing Python is if you play with it, you can do some incredible things, actually.
If you're looking for someone to walk you through the installation, give me a call.
I might just take you up on that. All right, let's wrap up with three final questions, if you don't mind. These are rapid fire questions. One, why should commercial real estate professionals be paying attention to AI today?
Oh gosh, if you're not paying attention today, you are just going to be steamrolled in about 3 years. It's coming. There's no avoiding it. It's important. You need to understand what its usefulness is and what its limitations are too, so that you're not bamboozled. But yeah, you need to have some knowledge of it. Yes.
Okay, so Sally, how do you use AI daily? What is your go-to tool and how do you use it?
So, I use ChatGPT for stuff. Everybody does. But in Python, I do a lot of modeling and run a lot of like regression models and run a forest and all that gradient boost on performance data, internal performance data, just to see what's going on and to identify what the factors are that are materially impactful. Some of the things, that's just kind of for fun. But some of the things like, all right, so this is one actually I got from somebody else. So in cities, one of the best flags for future gentrification, flower shops. Proliferation of flower shops, even more than like high-end restaurants, because flowers are discretionary income. They're also something you buy for a partner or a spouse, right? So you've got couples moving in who have enough money to buy flowers.
Hmm.
That was found through machine learning, through unsupervised learning, just giving it to the machine saying, okay, what's most impactful? And they came back with flower shops. And
Gosh, that's
yeah, so I
incredible.
do that. I use Python a lot just for fun to look for things like that, but ChatGPT daily. So
Okay, last question then. So this show is called the Easy Win Real Estate Easy Win AI show. And the idea is to provide listeners with, especially those who are reticent about AI and even testing ChatGPT thoroughly or whatever. So any suggestions for an easy win, something that somebody immediately could open up ChatGPT or do anywhere, Perplexity or Claude or whatever you like, and just do something that would be a kind of, oh my goodness, that's amazing. I didn't know that was possible. Let me try something else. Kind of easy win.
first of all these people who are afraid of it, you're already using it. If you've ever bought a book on Amazon that was recommended to you, you're already using it, or watched a Netflix. I'm going to go sideways a little bit. I'd take a class. That's what I would recommend. Take a class, because there's something about being in a classroom with your peers, and there's like MIT has one, Columbia has one, but you get ideas from other people and you spark your own ideas and you gain a level of comfort with it that you wouldn't have otherwise. So yeah, that's what that would be my easy win. It's not an easy win of implementing things. There's plenty of stuff out there. I mean, there's multi-family management. They have things that, like chat bots, and they automatically schedule maintenance. All that kind of stuff is really great and awesome. But educate yourself. Watch this podcast, right? Because the more familiar with it you are, the more it's going to spark creative ideas on your part. And the more you understand it, the more you can see how you can use it. So,
Sally Johnston, am I pronouncing your last name correctly?
yeah.
Sally Johnston, you are senior manager and lead of Market Insights Premium at the Altus Group.
Perfect.
What an enormous pleasure meeting you. Thank you
Oh,
so
it was
much
great
for
meeting
joining.
you too. Thank you. This was fun.
All right, that was Sally Johnston, who heads up Market Insights Premium at the Altus Group. Wow, what an interesting conversation. The world is changing very, very quickly. Sally, what a pleasure meeting you. Thank you so much for joining me on the show today. I'm looking forward to following up with you, and possibly to recording a demo that we can share with everybody at a later time. And thank you to dear viewers for joining us today. I hope you found my conversation with Sally as fascinating as I do and are inspired to follow up with her directly over there at the Altus Group and take a look at Market Insights Premium and see what it can do for you. Okay, that's it for this week. Thanks for joining me, and until next time, this is Adam Gower signing off.